All right, everyone, welcome back for the episode of This Week in Charts via Carnival Trades and Wall Street from Main Street. If you're not done so already, don't forget to give the video a thumbs up, like, comment, subscribe to the channel. Come find Jason on Patreon, and come find me on carnivaltrades.com for swing trading alerts, analysis, and live day trading. Day traders market for sure this week and really lately. But anyways, let's get into it this week. So last week we talked about the pop on Friday. We gave many reasons as why we thought this third one would be third time's the charm here. Right, we had the one 2 weeks ago, the one last Friday, and then this past Friday. And we did follow through a little bit. Let's, not call it a comeback though just yet. We're basically flat for the week. As you can see, Friday's close, 562.81. We're just hovering above that as we're into power hour here now. Friday afternoon. And we did have a nice dip buy though this morning. So stocks trying to finish out a flat to positive week and trying to close the week green. I'll give the bulls a little bit of credit for getting this dip buy this morning. But bottom line is we had the FOMC this week. That was our best chance to get a good squeeze, and we didn't really follow through on that. We had a good intraday move. It came off the highs, tested this trend line again. You can see this trend line is the bull bear line, right? We keep hitting it, and that's where we've backed off of. We even kind of got close to it on Monday, and that's where we've backed off of. You're also going to see the sell bar from the 10th, which was the past week's Monday. That is kind of coinciding with that area. So I'm just calling it at 570. So that's the big level. That's the line in the sand for bulls to try to reclaim. If they can do that, we should push up to 580 at some point here over the next week or so. But right now, bears still in control. I'll give bulls credit, though. They have come off the lows nicely. And if we look at the triple Qs, they are leading off the lows. Triple Qs are actually flat today, and they are now trying to go green for the week as well. So triple Q's getting the better dip buy here, and that's really what the market's been lacking. I mean, we've had decent. I mean, if we look at the equal weight is green for the week and has been really all week long for the most part. It's really just been Mag 7 that's seen this kind of unwind as money's kind of going to Europe. It's been going to other places, and we talked about this at the beginning of the year with the year-end preview, Jason and I, that when money leaves tech, like we thought it might in quarter one, it goes to where? Energy. XLE up very nicely, really since the beginning of the month. And if we take a look at the year-to-date performance, when I did my article on this back in late December, it was on the 28th, you can see now XLE easily leading the market here. You've got defensives like XLV and XLU up. XLRE or VNQ, which I usually cover, is holding up decently, but obviously XLK the worst. So XLE outperforming tech by 16, essentially 16%. It's basically gone the opposite way, and then you've got consumer discretionary there taking the worst of it. But XLE is held up. Now we're starting to see those valuations come in a little bit though. Europe obviously has had a big squeeze. We've seen China have a big squeeze. They're doing the stimulus over there. The composite here. Based on the forward PE and earnings per share growth. So they have the earnings per share growth. And now the forward PEs of some of these other, Europe, like the DAX, the FTSE, HSI, starting to get loftier, and NDX starting to get kind of more balanced. So perhaps that is acting as, maybe that's starting to, investors looking at this and, saying, okay, well, the Qs here, they've come off the highs now, and, we've kind of revalued them a little bit, and we're seeing that outperformance a little bit today. Also, typically, it's end of quarter here, right? End of quarter is next week. Well, I should say it's not next Friday will be the 28th. We'd have one trading day, so there'll be Monday the 31st. But we're coming into the quarterly OPEX though, and a lot of these positions are pinned to this expiry. And so you can see here, it's not a coincidence that the market just starts selling off right at the beginning of Fed expiry and stops selling right before March. I mean, these things are not coincidental. They're on purpose. So we'll see if that starts to unpin here a little bit. But again, bottom line, bulls got to get above that 570 on the SPY. For the Qs here, we need 485. We've got the red bar here at 483.97. I'm just going to say 485. That's the level that's been hit multiple times. And, above that on a daily close should push us up towards 500. Okay, and this is, and then from there, we'll kind of reevaluate things. Is this going to be a lower high situation where we go down to 450? for the spiders, is it going to be a lower high situation where we get down into this 540 area? It's certainly possible, but just throwing this out there, the consensus right now is lower high, from what I can see. And a lot of people are calling it a relief rally, and a lot of the time when that happens, it tends to go higher than people expect. But we'll talk about that if and when we get there, because right now we don't have that, we don't have confirmation of that. But I still think if we were to roll over here, 540, 545 would be very good support for this, for the spiders here. I know we've got this 530 area highlighted, but I like this area right here, those pivot lows from last September. And if we just take the August low, or excuse me, the April low of last year, so almost a year ago, you can see we've got a 618 sitting there right at 540 on the spider. By the way, just so everyone's aware, the spiders paid a dividend today. So SPX is actually closer to flat on the day than SPY. It's going to look like SPY's down more, but it's not. So you can see that daily candle there versus this SPX. It's a lot closer. But anyway, just a little addendum there. IWM here, obviously coming off the lows. This actually had a pretty good V shape this week up until the last day. And again, we've started to see the Qs outperform today. But this is green for the week, and it should hold green for the week here. And again, we liked this level at the 200 and 100 moving average, kind of going straight into that. And if let me zoom out a little bit farther, you can just see this is a big weekly level right here. A lot of pivots in this area. So this should, at least get defended, at least at first. And if it can really get going, and, it may have legs up to 215 at some point. But yeah, still got to get that confirmation from the whole market here. And we don't quite have that yet. The Dow has back tested its 200 moving average, and it's trying to build a base to try to push through that. But again, for me, it's all about the 570 on SPY and 485 on QQQ. We can see SMH was leading last Friday. We talked about that, and that did indicate the market was going to be able to bounce here this week. It is actually red this week, believe it or not. Micron reporting earnings yesterday. The stock was up at 108 initially after hours and opened lower today. So not a good look there for Micron and the semiconductor space. As semi's fractionally lower this week. It does have room for higher lows here, though. So just be aware, it's not necessarily broken here in the near term. IGV is green for the week, though. And again, I continue to maintain that software is really a much better area to be in than chips right now, if you're going to be in tech. And that's been the case for a while. I still love this weekly level here on the IGV. Dow Transports got roasted last couple of weeks, but it did, it did sweep the low today, and we came back up. So a good recovery. You can see. I don't even need to really even look at it. I can just tell that you have an RSI divergence. So when you sell off that hard and you don't really consolidate for long enough, you're usually going to get that divergence there, and that's what led to that false low today. Take a look at FedEx, obviously getting smoked on earnings. I had a level on this today at 220, and I was going to take it, but being that it's options expiry, I don't like taking, and they reported earnings yesterday, I don't like taking too many trades into options expiry, but yeah, 220 held, so you can see the gap down. Look at that V shape off of that. That would have been a monster day trade there, but either way, that's contributing to the bounce. UPS obviously down in sympathy, and down much less though. But transports themselves, yeah, not a bad sweep of the low. If this can clear 14.8, 14.850, you can try to work back up to 15.2 again. So we'll see. Transports trying to carve out a little low here. Interest rates this week, it was very interesting, no pun intended. So Wednesday yields were up, and then Powell came out a little bit more dovish, and they sold off. But if we look at the long end, so this is the twos, we look at the long end, look at the tens, they sold off, but they've bounced back. And we have higher lows here on the daily. So no real damage, and you look at the 30s, same thing. So I think long end is going to try and go through this level here at 4.6, 4.65 on the 30s, and 4.35 on the 10s, where the twos can come down, right? So the Fed is starting to get more room to cut. And the twos can come down if we can have continued slowdown fears. But we still have in my opinion, secular inflationary pressures that's going to push the long end up. So as opposed to the traditional everything down, I think it's going to be long end up, short end down. But that hasn't really changed at all. But we did have like a 1 day squeeze in bond shorts, and then they came right back. XHB, again, it's holding the 97.50 area. So it held it for the first couple of days this week. We gapped down, and we're back above it. But still a lagging sector. BNQ here, holding up. Again, it's green for the year. Spiders aren't. It's got a nice inside bar there that it's working on. Little test candle today. If it can hold this low, it can try and work its way back through 92.50. But again, probably going to need help from the market. Here's the positive for the bulls. And we actually had a trade on this XLF play via FAS. But it's had a nice trend line sweep. And we got back above last Friday, which I talked about. And we've, it's had a green week. I mean, XLF is strong. So usually when financials are strong, that's a good sign for bulls. Everything starts at the banks. If XLF can build here and start to work its way back up, then that's obviously going to be a positive shot in the arm for the market. You see KRE still got to get through 58.50, but that has had a nice rebound, and so does KBE. Broker dealers holding up as well. So into the 840 area, and then again trying to consolidate inside bar. It's going to need to do a little bit more, I think. But broker dealers are holding up well. Robinhood's one that's come back off the lows. Had a nice test of 35. So these dealers are doing well here. And Robinhood's a good bellwether for risk too. It does have a crypto play, but it's also a dealer in stock too. All right, oil this week. So we now have a failure here, and it's a bullish failure. So that high from the 5th has been closed above. So I had an upside bias to 70 anyway. I'm going to give it the upside bias to 70, maybe 72 now. And that's despite all the terrible, we've had like deflation prints, not quite deflation, but we've had pretty weak economic data. We had a dovish Fed share, and oil's rallying anyway. So what does that tell you? It tells you either the market's saying the data doesn't matter, or it's wrong, or the market is wrong and there's way too many shorts in this. And I think it's the latter. So oil holding up well. XLE, like I said, strongest sector performing this year. And I still got my X on. And that's been, it's had a nice comeback here. I love this. I mean, what a beauty. This is a textbook. If you guys, this is the type of play I look for in the trading room. If you guys, if you guys are in the trading room and watching this, you know what I mean. We call this a fake breakdown. So when you sweep that low, you bounce back up and close above, and then you just rally. And we did that on the weekly too. So beautiful spike there, and then boom, right back up. So it's a risk off. It's paying you to own it while tech is hemorrhaging. You're getting paid to own it, and it's not going anywhere. It's Exxon. Their PE is low. So if we're having a revaluation, this is a good place to be in. Anyway, enough of the sermon. XOP, again, closing above that big breakdown bar from the 3rd, so that is a positive. Still got a lot of work to do. There's a ton of resistance up here, but a good, again, kind of the same pattern, right? Sweep of the low, and then right back up. OIH, similar thing. Needs to close the week above 260, though. And it doesn't look like we're going to do that, at least now. CCJ uranium plays again, also rebounding. This needs to clear 47. URNM needs to clear 37. But I do like, before I get to NJ, I do like this level here on the weekly. I've talked about that. And it is holding. And then NJ here needs to clear 17 and then 18. But they've had nice bounces. Nukes bounced off the 200 like we thought it would. Nat gas may have topped out for now. We talked about that big tail candle, and it has pulled back in off of that. So this is going to need to consolidate on the bigger time frames, like on the weekly, probably for a good amount of time if it wants to go higher. But it has held up nicely, and it is backing off. It's had a hell of a run here. I mean, 2 to 5 basically since November. So A good move there. Dollar index finally getting a bounce. And again, we talked about this, you know, it's kind of what I'm suggesting here is money maybe finally starting to back off of this China and Europe chase. And they're like, you know, the algos were just programmed for the last 4 weeks, basically sell dollar, buy euro, buy China, buy Europe. You know, look at the HK50 here. The Shanghai Composite got a nice run, although it has not been as good as the HK. And, you know, the FTSE coming in now. CAC 40 coming in. DAX, maybe a little top heavy here in the near term. But you're seeing the dollar finally get a little bit of a bid here. And that's after, you know, a dovish Fed. So if this can continue up here, it can try for 105. Gold at new, fresh all-time highs above 3K. We've been talking about this for a while. We said, you know, it's going to go up in past 3,000 by end of Q1, and we already done that. We're almost to my target. I'm looking for 30.76 on the futures. I believe the contract roll is coming up soon, so that might be like 30.90. But we're close to I think, a medium-term top in gold. That doesn't mean I'm going to sell everything, but it just means I think we're getting top heavy. For me, it's more about time than price here. So I'm thinking kind of like early April. Silver as well. Again, coming off the highs here. This should have one more peak though. Usually gold likes to peak before silver, and then silver has its secondary high. So I'm thinking that will be next month. Platinum coming down pretty sharply this week. I haven't really liked this for a while. Same thing with palladium. Made money every time I've traded them. I haven't touched them in a while, so I just don't see anything I like there. And then copper's just been on a tear. It's just been on a tear. Every time somebody sends the word tariff, this goes higher. Doesn't matter if Canada says it, doesn't matter if Trump says it, doesn't matter if China says it, it just goes up. But yeah, big move here, and you know, you got some resistance up here, but it's really strong, and commodities can, you know, overshoot. Bitcoin with kind of a boring week here, so really kind of sideways. It had the nice move on Wednesday, no follow through though, and we'll see if it can close the week above its 200. So kind of flat, just like the equity markets. It held the weekly 50, and you know, it's getting a moderate bounce. If it can get its legs underneath it, you know, maybe we can get to 91.50 to 92 again. Right now, just kind of a, you know, a lazy bounce here off the lows. A lot of this is probably due to the expiry. So we'll see once this market in general becomes a little more unclenched. I mean, that's why we went sideways all week. So we just had this pinning effect here in the market. But we'll see what happens next week. This market becomes a little bit more free. And again, but bottom line, you know, 570, that's got to clear. Or I think if we start to roll down, you know, 540, 545, that's pretty much like max downside right now that I could see. I think those would be very good areas to buy. So anyways, guys, I'll wrap it up here. Again, you guys take care. Don't forget to come find Jason on Patreon. Come find me on carnivaltrades.com. I'll see you guys all next week.